and welcome to Business Incorporated live on Channels Television. We'll be tracking the markets, the economy, and it's Thursday, and of course we'll be seeing how all that affects your pockets. Here are the stories that set your agenda. Zambia's culture sees rally as foreign investors flock bond markets. And Egypt signs record $3.5 billion spectrum deal to boost 5G capacity. And South African beef exports fall sharply in 2025 as foot and mouth disease spread across the country. Great to have you join us for this half hour. I'm Will Ibang. Let's kick off with the commodities market and see how they are faring today. Today's Thursday. We look at the oil markets. We definitely see oil dropping, especially after we saw that tension still brewing for Iran and the U.S. Talks seem to be getting down really fast. To see oil down at today, 0.49%, that's Brent crude, to settle at $69, $7 a barrel. We see WTI also in the red, 0.4%. Well, we have the outlier here, that's the natural gas. That ticked up 2.66%, so $3.24 a barrel. Let's see if metal space are faring any better. Today we see metals all in the red, except for copper, but spot gold recovered yesterday, especially we had that U.S. Jobs data that came out, really strong data, but after that recovery, we see that decline today. We see it down today 0.35% at $5,081.60 per ounce. We see spot silver also down over 1%. Platinum is also down nearly 2% there. Palladium also in the negative zone. Copper is up 0.9% at $5.98. And look at more commodities now with energy drinks in Nigeria. They're growing really fast, but prices have jumped sharply from about 800 naira to 1,200 naira for a 250 ml can, and that's in a year. We want to know why the prices are rising, even as inflation begins to ease in the country. And we're joined by FDC analyst Toju Megasin. He joins us from the island there. Toju, it's good to have you join us. Toju, why haven't we seen energy drinks, the prices come down for Nigerian consumers?
So as you've already highlighted, we have seen a 50% increase in the price of energy drinks year on year. This is in spite of a fall in our inflation rates in 2025. And although that might seem contradictory to you, this could be attributed to a rise in the cost of inputs and these key ingredients that are used to make energy drinks, such as sugar, flavoring, sweeteners, aluminum cans, PET, and caffeine ingredients, which are all imported by these manufacturers. So you need to take into account that when the Naira does face any devaluation, that just makes acquiring these components more expensive for the manufacturers. On the other hand, we also have to take into account that the strong demand for energy drinks is predominantly driven by the youth that are working long hours, engaging in nightlife culture, and also balancing both or at the same time. So this gives space for these brands to actually increase their prices without facing any form of backlash, showcasing the product's low price elasticity.
Okay, so but if we're still relying on imports for about 40% of the energy drinks that we consume in the country, at a time when the Naira seems to be a bit volatile, what practical steps can local manufacturers take to cut imports and grow their market share and ground themselves in the markets?
Well, yes, that's easier said than done. I do feel that the current market share for energy drinks in Nigeria is actually in the favor of domestic producers. Although ultimately I would love to see that share increase even further from 60% to 80% to even 100%. And this can be achieved through the sourcing of local inputs, as you mentioned. So firms just investing in the production of local, investing in the local production of components I mentioned earlier, like sugar, sweeteners, flavoring, and caffeine substitutes to curb FX exposure. Alongside this, there's also backward integration, which can be done through developing or partnering with local packaging plants to cut down on the importation of packaging. And lastly, I'd also like to touch on the fact that I feel like these brands also need to focus on developing their products ensuring the quality is up to standard, and as well as targeting the right spaces to actually distribute their product, like gyms, college campuses, transport hubs, and nightlife hotspots.
Okay, speaking of quality control there, as NASDAQ's tighter regulations had a direct impact on how much energy drinks are taken off the shelf in shops?
Yes, so it's important to note that energy drinks are, although they do provide a short-term solution to your fatigue, they come with some long-term health risks. Hence, the prohibitions put in place by NAFDAC. So this results in a higher compliance cost for these brands that's actually then passed on to onto their retail prices. As well as that, these brands are also taking steps towards reducing the levels of caffeine and also maybe reducing the sizes of their cans or their bottles, just to stay within the guidelines of NAFDAC.
And definitely, we all have to stay healthy, even though we're taking energy to stay energized. Thank you so much, Toju Magazine, analyst with Financial Derivatives Company. So move on to other stories now. We see South African beef exports fell sharply in 2025 as foot and mouth disease continues to spread, prompting bans from major markets like China. Now, farmers, smallholders, they're facing higher veterinary costs and disrupted supply chains there. Now, milk and meat production have also dropped. The government have launched a nationwide vaccination drive, but producers warn more is needed to restore exports. Still, stories making the headlines that we see Egypt has signed its largest spectrum agreement ever, raising $3.5 billion to expand radio frequencies for its 4 main mobile operators. And the move aims to boost network capacity and support faster 4G and 5G services. And the deal nearly doubles spectrum allocation in Egypt over the past 30 years in a single transaction, improving connectivity and preparing for rising data demand. Now, Egypt launched 5G in 2025, and officials say this sale will strengthen the country's digital economy and next-generation mobile services. Now, let's see what next there. We see in Zambia, the currency is rallying, supported by strong foreign interest in local bonds after the government eased limits on non-resident participation in the debt market. And foreign investors have piled into Zambian government securities, helping lift demand for the kwacha. The increased inflows come alongside broader gains for the kwacha this year, supported by improving macroeconomic conditions and mining-related foreign exchange receipts. And analysts say the bond participation and tighter foreign exchange flows are helping stabilize the currency and draw investor confidence amid ongoing economic adjustments. And let's now head to the markets and see how they're performing at intraday. We start with equities in Nigeria. We see NGX. Well, there's a pullback. Definitely profit-taking has to take place. We see the NGX down from the high we saw yesterday of 178,000, down now at 177,928. That's at the time I checked at intraday. And this was on the back of, losses in some stocks. But we saw gains in Cadbury, Presco, but this did not hold back, stop that fall we're seeing at intraday. So that's at 0.14% on the screen. However, we see South Africa at intraday trading positively over 0.5% and at 122,388 points. Let's look at Egypt and see how they performed at intraday. We see over 0.5% as well, 0.57%, 49,000, but drawing back from the 50,000 that we have there, 49,984 points. And we see Kenya very bullish. Yesterday's close 1.18%, 208. And, Kenya's stock market, as we know, yesterday we saw that it has gone mobile. The app ZD Trader now offers stock trading on its M-Pesa platform. For the first time, ordinary Kenyans can now buy and sell shares on the Nairobi Securities Exchange without a traditional brokerage account. And that's what we saw that impact the sentiments bullish for the NSE, up more than 1% yesterday. But speaking of the NSE, let's go back to the NGX and see what's causing the negative sentiments we're seeing at intraday. We're joined by Onose Asotie Naolo, Senior Investment Analyst with Main Street Capital. Good afternoon, Onose. Onose, the NGX rally appears to be, taking a step back now, but still in line with expectations, I hope. But the question is, does the rally still have legs?
Yes, I think the rally does have legs. So it depends on the timeline you're looking at. For today, the major stocks that are pulling down the NGX, at least for the intraday is Ardell and Dangote Cement, right? So those are just two stocks. Now, of course, there are pockets of sales in other stocks, but these are the two major stocks just because of how largely capitalized they are. So if you look at both prices, they are both at pretty significant highs. Both Ardell and Dangote Cement. And even if you look at this week from Monday till right now, we've seen pretty significant price increases from both of these stocks, at least compared to their size. So both of them are up like at least 9%, this week so far. So it makes sense that we will see some profit taking, and it depends on how, severe this profit taking is and how long it's going to take. I don't think it's going to take so long. So within that period, we might see the market kind of wobble. But after that, I believe we're back to, positive sentiments and an uptrend.
Okay, no, we did have that projection that the NGX would hit 200,000 in the first quarter of this year. Do you think the market is being overly optimistic?
For the NGX hitting 200,000, perhaps, because you do have a situation where no matter how much small and mid-cap stocks run, they don't have so much of an impact on the benchmark index. And if you look at over the last 2 weeks, if you look at the price charts, you see a point where the market trended, the benchmark index kind of ranged, right? At that point, small cap stocks were being bought. We saw 45%, 60% weekly increase in small cap stocks, but the large cap stocks didn't really see much volatility, right? So the benchmark index itself didn't see much volatility. Now, the larger capitalized stock is the more money you need to really push the price upwards. So if the benchmark index is really, connected to the large cap stocks, then it means you need a lot of money. Now, it is possible because you have a situation where PenCom has recently raised the limits for PFAs. So you might see a lot more funds from PFAs coming in. Now, of course, if we have billions coming into large cap stocks, that could very much be possible. But then it just means you need to see a significant liquidity influx into the market for that to happen.
In terms of the uptrend that we should still expect in the equities market, what sectors do you see driving this?
Right now, oil and gas, some consumer goods, and financial, banking, and of course, consumer goods, but specifically Dangote Cement and, Lafarge, which is WAPCO.
Okay, so speaking of the banking sector now, we saw that deal fall through for Access Holdings, Access Bank. How do you see investors' sentiments toward the stock at the moment?
So Access hasn't really been one of the runners that we've seen this year so far. It hasn't really been one of the runners we've seen. I don't think we should see so much of a decline, because of that. I mean, even their release, their circular said that it's because they failed to meet up with the regulatory things that they needed to meet up with before the deadline, and it does not change their outlook on the South African market or their interest in buying up, a bank or expanding into the market. So there is still hope because another deal can be, negotiated. We can see maybe it's possible to ask for an extension. Things can be done. There are ways around this, right? And so we know that Access Bank still wants to get into the market. Access Bank is still very much interested. So things could be done, So it's not right now, it's not a, be all end all kind of situation. So I don't think Access Bank's price is going to see so much of a beating because of this.
Okay, so I also see that news coming out in the market. Deep Cap also getting additional funding, and we know Deep Cap is also committed to financing mining in the country and across Africa. How do you see this pushing Deep Cap? Do you see it pushing to Deep Cap's stock price to double digits in possibly, say, in the next couple of months?
All right, so for that, you kind of have to ask, because if you look at Deep Cap's trend, Deep Cap is up, I think, over 100% already this year. So now the question is, has this influx been fully priced in to the market, right? I think over the last 1 or 2 weeks, deep cap's price has gone down like maybe 20-something% or so. So it's like, okay, obviously, some people expected this to happen, and I think this started when there was this memorandum of understanding from Deep Cap, in relation to even I think the gold mining announcements, from the federal government and all, So it's like, it hasn't fully been priced in yet, right? And we're gonna know by just watching Deep Cap's price. If you see a significant push upwards, then okay, maybe it hasn't fully been priced in. If you don't see so much of a push upwards in the next couple of days, then it means that the speculation around that being priced in has already happened, because the price is still pretty significantly high. And so now it's a question of, do investors or the market participants think that where Deep Cap is trading right now reflects the value of that influx coming in, right? And then price will always tell what people really think. And so it now depends in the coming weeks and months, is there going to be a situation where more fundamental data comes out that causes more repricing? Because I feel like a lot of that has already been priced into the market from what we've seen, even though movements you could say movements have been largely speculative, yes, but that has been priced in somewhat. So if we now have more fundamental data, and then we can now see maybe more price movements in reaction to that data.
Fantastic. So how do you see the market closing? Just one word on us, green or red?
Red.
Whoa, that's a big one. The market definitely has one pullback this week, and we'll see how that affects, impacts, those that are going to make money from it, and those that probably will go in home crying. Thank you so much, Onose Asote Enalo, Senior Investment Analyst, Main Street Capital Limited, for joining us on Business Incorporated.
Thanks for having me.
So let's check in with other markets now. In the Middle East, we see our stocks in the Gulf in the green at intraday. Today, Thursday, amid the lackluster company earnings and investors unease over tensions between the U.S. and Iran. Let's look at Dubai. We see that index up 0.43%. Abu Dhabi is also up 0.12%. Let's look at other regions, the indexes. You see the Tadawul in Saudi Arabia is up 0.27%, while the Qatar index is down at intraday 0.3%. Let's move on to U.S. markets now. In the U.S., we see futures are up as most of stocks seem to be recovering from the AI jitters, especially now that we had that jobs report data from the U.S. But let's see Dow futures rising 0.26%. It's at 50,338 points. S&P futures up 0.26%, same margin. And we see NASDAQ futures also up 0.22%, all in pre-market trading. Let's see that maybe investors are coming out of that AI concern. Let's look at Asia now, how they close today's trading. We see the Nikkei down 0.02%, but South Korea's stocks surpassed the landmark 5,500 points, and that's the first time in history that's ever done that. And this was boosted by sharp gains in blue chip tech shares. Local currency also gained ground against the U.S. dollar. Let's look at other markets. In China, we see the Hang Seng also in the green. Shanghai is in mainland China is up 0.05%, and Nifty 50 in India, however, is down 0.6%. Now let's take a look at how European markets are trading today, and we have Chipunda Chimbelu, and our Deutsche Welle correspondent, standing by. Chip, how's it going over there? How are EU stocks trading?
Well, European markets are gaining today, and the continent's benchmark index, the Stock 600, is actually up around 0.4%. And Germany's DAX is faring even better. It is 1.4% higher today. Well, the DAX is being buoyed by German industrial giant Siemens. Its shares have risen more than 6%, and that comes after it raised its outlook. Now, Siemens' share price jump today has lifted its market capitalization. It is now the most valuable company on the DAX. And elsewhere in Europe, there are also gains, and they are coming off of the better-than-expected U.S. jobs report on Wednesday. Of course, the U.S. Labor Department report showed that American employers added 130,000 jobs to their payrolls last month, and that is way more than economists had been forecasting. And so the latest data could also be a sign that the U.S. labor market is stabilizing, which is, of course, also supporting investment and investor sentiment here in Europe.
Definitely away from markets. Let's see what is happening else in EU. We see pilots and cabin crew of Germany's flag bearer Lufthansa. They're on a strike today. The unions have called a 24-hour walkout. What's the latest on that?
Well, the airline Lufthansa has said it had to cancel 800 flights in Germany today, and around 100,000 passengers are affected by those flight cancellations. Now, the strike began a minute after midnight, and it will end at 11:59 p.m. German time. Now, the airline said that affected passengers would be informed, and of course, those passengers can also check the airline website for any updates. Now, the strike will only affect the core brand of Lufthansa, which also bears that name. So other airlines that are part of the group, that includes Swiss and Austrian, for instance, they are not affected by that strike, unless, of course, their passengers have connecting flights that are flying on that core Lufthansa brand. Now, the pilots are actually demanding higher pension contributions from Lufthansa. And as for the cabin crew union UFO, it says that its members are striking because there has been no movement on the main issues of disagreement with Lufthansa.
But what exactly is the disagreement here? Lufthansa management and the unions, what's the bone of contention? Why are they not reaching a consensus?
Well, Lufthansa Group wants to shift more flights from its main brand to its other subsidiaries. And by 2030, about half of all short and medium haul flights could be operated by those other airlines. Now, that is a plan that doesn't sit well with the staff at Lufthansa's core brand, because it means job losses for pilots and cabin crew there as well. Now, Lufthansa Group plans to move the flights to other airlines because the pilots there are paid less, and that's obviously a bid to cut costs. Now, as for the cabin crew union, it has been negotiating for better working conditions and also for a collective social plan, which would allow for workers who could be affected by any future job cuts to get a better severance pay as Lufthansa phases out some flight operations over the coming years. Now, it is worth mentioning that this strike is no surprise, because the unions had already been warning that they were planning to strike early this year, months ago, and the hope there had been that their warning could force the Lufthansa Group to cave in and agree to their demands. Now, of course, we see that that didn't happen, which is why we have that strike today.
Thank you so much, Chiponda Chimbelu, for that update. Chiponda, always good to have you.
Thank you.
Now let's look at what's happening in crypto. Let's see, did the market turn green today from the sell-offs we saw yesterday? Yes, we see green for Bitcoin. Bitcoin, definitely investors buying the dip there. We see it at 67,858, up 1.13% today. Definitely great one for the markets. If you did buy the dip, good one for you. I would say also Ethereum in the green, 1.5%, and see BNB also in the green, XRP also in the green. Just pockets of red, just like we saw yesterday. We had pockets of green and whole red calendar red. Board was just in the red yesterday. But definitely investors are bullish and buying the dip, and so we see a recovery in that. And definitely more news coming in from the crypto space. We see that major finance crypto news today. Global asset manager BlackRock has made its first move into decentralized finance. That's listing its treasury-backed build fund on the decentralized exchange Uniswap. An integration enabled through a partnership with tokenization specialist Securitize allows qualified institutional investors to trade this tokenized U.S. Treasury fund on-chain as a significant step in bridging traditional finance with DeFi markets. Now, BlackRock also acquired a strategic stake in Uniswap's native token Uni, which has surged on the news, signaling growing institutional confidence in decentralized financial infrastructure. Let's see what's happening next in the crypto world. We see Binance has completed a major strategic move by converting its $1 billion SAFU emergency fund entirely into Bitcoin, acquiring roughly 15,000 Bitcoins in the process. And the bold shift from the stable coins to Bitcoin was wrapped up in under 2 weeks, signaling strong confidence in Bitcoin as a long-term reserve asset, even as market sentiment remains cautious. Stay tuned as we break down more of that in the exchange. But let's look at what's going on in other space. We see a new survey finds some young adults are flirting with crypto on Valentine's. speaking about Valentine's Day, about 13% of Gen Z respondents have actually paid for a date using cryptocurrency, though many haven't due to a lack of payment options. Now, the data also shows that financial literacy and digital asset knowledge are seen as attractive qualities in a partner, especially among younger generations. While crypto hasn't become a mainstream date payment tool yet, the trend highlights how digital finance is shaping social behavior among Gen Z. I think I should go back to being Gen Z and, get a crypto date right at this moment. And that's a wrap on crypto and also a wrap on Business Incorporated. I am Will Ibang. Bye for now.